Yes, so welcome everyone to this episode of Entrepreneur Speak series by ESL IMT Ghaziabad. So, as you know that in this Entrepreneur Speak series, we invite eminent persons from the startup community to share their views and insights on various areas of entrepreneurship. So today we are fortunate to have Sridhar Rallabandi with us, who is a former CXO and presently a startup advisor, startup investor and mentor. To give a short introduction, Sridhar Rallabandi has held various leadership positions across the banking and financial industry for over decades. He was the head of global markets and treasury at Axis Bank. So then he went on to lead the retail operations and IT, and finally also leading the wholesale operations in the bank. And in 2015, he was appointed as the chief audit executive of Axis Bank. So after that, he joined Lakshmi Vilas Bank as the president and chief risk officer, where he worked with the top management and the board to engage in various strategic initiatives. So presently, he is a startup investor and he has mentored several startups. And for example, StuMax, which is one of the India's top digital campus ecosystem, and also Care and Grow, which provides preventive healthcare solution for school children. Welcome to this episode. Starting with the first question. You have had a illustrious career in the banking industry. You held various leadership positions across banks for several years. So then you chose this, this job of working with startup, acting as their mentor and advisor, and also choosing to invest in them. So, what exactly made you to take that decision? Any specifics behind that decision?
Good morning. Thank you, Arghadeep, for inviting me to your Entrepreneur Speak series. Yeah, getting to the question, I got interested in the startup ecosystem when I invested in Care and Grow, which was while I was still employed in banking. And I chose to take an early break from banking. And then I was looking at, okay, what are the options one has got? So while personally I do keep myself busy a little bit with certain other matters, I also thought this space of startups is where there is an opportunity. So one of the things I find with the startup world is the promoters are typically quite young. They are possibly fresh out of college or just a few years in the industry. So they have a great idea, but I guess maybe they do not know the rest of the stuff, how industry works or how is the real world of, let us say, dealing with suppliers or dealing with the market, the competition, and also the other things of the finance related issues. So I found from that perspective that while the startup entrepreneurs, promoters are very good at addressing the product challenges, and they have a fairly good idea of what is the competition, what is the market, and how do they position their product in order to win the market. But I found typically their understanding of dealing with investors, their understanding of projecting the business in two ways possibly. One is from the vision perspective of the product, what exactly is it, a single product, multi-product. And if you say you're going to do something which is, let us say, B2B, then why are you there? And how do you deal in that space of B2B? And then the second aspect of, okay, what is the money you are asking for? Why are you asking for that money? The thing that I have found in this startup if you're able to convert sales as in number of pieces, but also what is the revenue that you're going to earn? How are you going to reach there? What is your strategy for it? And revenue, what will be the expenses? Eventually, to figure out if you are generating an efficiency in your business that will attract investors.
Okay.
And making a pitch deck is not just about outsourcing it and getting someone to make the pitch and the business. How will you explain this to the investor in financial terms? I found these are the places where there are gaps that I could.
Okay. Okay, sir. Okay, so that's great to know. Sir, I would like to ask one thing that as a startup investor, what are the particular traits that you look for in a startup?
I'm sorry, this last part got cut off. You'll have to repeat
Yes.
that. There's
So
a
yeah,
lag in
sure.
transmission.
Yeah. So I am asking that as a startup investor, so what are the particular traits that you look for in a startup while choosing whether or not to invest in it?
The first thing is, of course, the promoter. You know, everything depends, according to me, on the promoters. Not just an idea, because an idea might be there with a number of people, but the desire and their potential to achieve the desire that they have. The second is how well is the product looking, and whether they are at a stage where is this just on the drawing board or is it really in the practical world? Where are they in that sense? And also, you know, the thing with some cases I have seen is people have a great product, they're focusing more on the product. Then the question that comes is, where is the commercial element in this? Because as an investor in a startup, my intention is to earn a return out of it. If you're going to do it from the perspective of, okay, research project, and you keep doing it, but you have no commercial intent, sufficiently strong intent, then, you know, as an investor, I should be prepared to write off that money. So there are certain funds and there are certain other foundations that do support such ideas. But then where I come from, I'm looking for the success of the startup from a commercial sense. So you look at these things, and then how is the promoter from his strength perspective? If he has got a team, then what is this team comprising of? Usually between promoters, you like to have a clear focus on the areas that they are going to concentrate. You don't want everyone in every area. And then therefore you also need to understand how well is the camaraderie between the promoters. How well are they gelling, whether they're able to do those things. The third thing would be in terms of the stage of the enterprise. While I have put money into a very drawing board kind of an enterprise, but these days I don't do that. I actually look for something that is crossed a stage and it is ready to get into a commercial launch, or something that is got into commercial launch and is now going to take off. And the fourth one would be how communicative are the promoters? Do they accept a word of advice? Do they listen to you? Or are they, you know, people who take the money and then you don't have any view of what is happening in the company, or you don't get any updates? This is a personality issue. So those are the 3-4 things that I typically look at.
Yes, sir. So I think that's a very important point you actually brought, that the commercial intent behind the product. Like many a times it is seen that the entrepreneur may develop a great product, but may not be the product may not be that commercially viable in the market. So that is a very important point I think you pointed out. So coming to the next question, I think it's somewhat related to this point which you said, that so many a times an aspiring entrepreneur, when he or she has a great idea, so he is unsure about how the market will react to that idea. So coming to this, it may happen that he spends a lot of money in the launching the product, but later finding that he's not getting that initial traction from the market, and that can lead to a lot of wastage of money, and that can be a big problem in startups for entrepreneurs starting with a minimal investment. So coming to that, what are the few strategies that entrepreneurs should follow for idea validation to validate and check their idea before launching?
Yeah, I think at the stage of idea validation, the promoter should have done suitable groundwork. You know, if you want to start something on your own, you want to come up with an idea. These days, let us say due to the COVID-19, people are experimenting with various ideas. If you want to do it on an individual basis, you might start something and do something. The moment you put that into a startup venture, you should have taken those steps in a manner that consulting is over. You have done enough groundwork. You have seen what's happening in the market. You should be able to display all that, right? If you get into, let's say, edutech, because these days edutech is quite active, the question would be, have you understood what all other edutech companies are doing? And if you want to come in, then why do you want to get into that field? What is it that you're bringing there to the table? And how do you think you will succeed, right? When the market is really full of competitors, you need to find out what's your competitive niche and why do you think you will succeed. That itself, when you ask the promoter, you should be able to gather enough from him to give you the confidence that he's done basic, research. He's checked out sufficiently. He's met with potential, customers. He's also interacted with competitors because they're already entrenched. And he displays in himself an openness to learn and an openness to correct himself. So if you are stubborn about an idea, but you don't really haven't done everything that needs to be done. Now, if you start behaving like the unicorn entrepreneurs, it won't work. You are just starting. So you need to do the marketing research. One way of ensuring that your idea is good is to show competitively how well you are positioned. Where do you score sufficiently? Now, just because you are marginally better than someone, it's not going to work. It's the content, it's the delivery, and it is the marketing of it, the customer segment of it. Where is it that you are good?
Yeah.
Ideally, you should have done some form of marketing research, not necessarily engaged a big company to do it, but do it in a formal manner. And second thing is also go and figure out through some test marketing, maybe figure out with some actual customers and see how do they react to your product. The usual mistake that startups do in this particular thing of talking to customers or checking out customer reaction is they forget that they are going to be operating commercially. So what works free does not work if you charge something, right?
Yeah.
So these days you must be aware a number of companies offer edtech courses. So you can just log on to their site and these courses are free, or they charge you maybe 1 rupee or 100 rupees. It will work very well because students are at home. They'll say, okay, a 15-minute course or a half an hour course, a small thing that addresses a particular area of interest to them. They'll be happy to spend that time. But how do you measure their interaction? Are they paying attention or have they just logged in? How do you know that this customer, this student, is going to pay you your commercial rate? Your commercial rate might be determined at, let's say, 10,000 bucks. Do you know that when you actually launch it commercially, once COVID is through, you're looking at the student and asking him to pay 10,000. Do you think he will pay? So I think if you don't look at these things critically, you might start up saying that my idea is great. I have got so many people logging in or so many people interested, but you miss the critical point that commercially it may not succeed. So there are these kind of issues that need to be looked at deeply.
Yes, sir. So I think that
A number of things you do it with marketing or doing it with some kind of external people.
okay. So, sir, I think yeah. So as you said that again, that point of commercial viability again comes out, like whether the customer is willing to pay enough for your product and service. So that is actually, I think, very important to
Yeah.
critically judge that thing. Yeah, so sir, coming to the next question. So as I think you will agree that having the right team is very important, very crucial while building a startup. So whether it is looking for the correct co-founder, hiring the right team members during the initial times. So having a good team is of paramount importance. So what is your advice to the entrepreneurs? What are the traits they should look for in a person, or what are the things to keep in mind when looking for a co-founder or hiring the initial team members?
That's a good question. From a co-founder perspective, it is an excellent thing if you have a co-founder right at the start of the project, because he's deeply entrenched in the project and he owns it equally. It's like your baby, right? However, you reach a certain stage and maybe you are now ready to raise funds, and then you start looking for a co-founder. You actually have a problem. The problem comes in terms of the ownership. Because the founder has already done everything, you expect the co-founder to come in and, just be the navigator sort of. The question then comes, okay, the idea is already there. How much is the co-founder owning the idea, right? So my sense would be, ideally get the co-founder at a very early stage. And as you progress in the journey, if you need more, you add more co-founders. Now, what are the things you must look for? First thing is, let us say a person who's a bright engineer starts off with an electric vehicle project. What he may need to understand is the sourcing of the material, because the important component there is the fabrication of the vehicle and battery pack and the mechanical. So the key thing. As mechanical engineer, likely that you know certain stuff, but it is possible that sourcing of individual components like the electronics might be critical. In fact, electronics and the battery would form the major chunk of cost. So if you get a co-founder who understands materials, who understands fabrication, who understands sourcing, because you may not be able to source from India, you might source from China, maybe Taiwan. So if you get a co-founder with that kind of a background, he's a good match for you, right? As an extension, when you want to go out for marketing, who's responsible for marketing? Because you have set up the product and because you have now raised the money, if you want to take on the marketing, you must be prepared to face it in an objective manner, because marketing involves dealing with competition, or where there is no competition, actually generating demand. Do you have the experience of dealing with the markets, talking to demand and selling? If you don't have it, don't just wear that hat because you are the promoter. Ideally, look out for someone who can do that. In certain fintech operations, for instance, technology, keeping the product running is extremely important. You cannot afford a breakdown. So the CIO, the CTO becomes extremely important. You might want to designate him as a co-founder. Now, in each of these things, as you look for people, remember that there is a bandwidth that you need to have. If you are a sort of a guy, would you be able to take a person who's a name expert? It's a decision that the expert has to make. Similarly, the co-founders that come in should also be able to figure out if they can match the founder's wavelength. Eventually, everyone should be on a similar wavelength. There is one other thing which is important. Every co-founder should be able to bring in something that strengthens the team. Strengthens the team as in fill the gaps, not just money part. Getting money in something is not really the great thing. So these are the things that one must look for in a co-founder. And maybe it's important also to look at what is the understanding a co-founder has. Does he have enough experience? Has he put in 2 years, 5 years, 10 years? It is not necessary that all startups should have very young people. It might be useful in certain aspects to have co-founders with a number of years of experience.
Okay, yeah, yes, sir. So I agree to that point that, as you said, that co-founders need to fill in those gaps which are required required while building a startup. So I think that's a very important point you made. Sir, so coming to the next question. So one of the conventional wisdom is to become big, a startup need to solve problems which are big enough. So that actually refers to tapping the huge consumer base of India. So that is one point. But on the other hand, if you look at various famous startups in the B2C space, which has actually become great companies today, like Flipkart, Swiggy, Ola. So these all startups, when they started, they got this initial traction by spending on heavy discounts and burning a lot of cash. So, for entrepreneurs starting out in B2C space, what is your advice to them? Is there any alternative to this? And if yes, then what can be that alternative rather than burning a lot of cash initially?
It's difficult to pronounce a judgment kind of a thing. However, I'll address your question in a different manner. Leaving aside Flipkarts and others, I think when they went into this, they were lucky to have promoters and investors who came in very early and were willing to underwrite the discounts, the huge cash, outflows. They were lucky to have that. Today, as we speak, some of these e-marketplaces or some of the e-retailers do have issues. They are not yet profitable, but they are lucky that they have such promoters. If you start a new company with something like that, how many people will be coming? You may not get investors. In general, I would think that it is all right for a startup to have cash at some point. Go by this principle that you will grow big by acquiring customers, and at some point of time you will turn profitable. Fact is, Uber went for its IPO in the US. It was not posting profits. And it said in its IPO that we are not promising that we will turn profitable anytime soon. No, it is Uber. It is the same thing. It's not likely to happen. You might have a great idea which might require a certain amount of seeding. People are willing to underwrite that. You might have to do it over a period of time. You might have to take a certain minimum number of customers in order to launch into the next level. People are willing to underwrite that. But I think people have started questioning now, what is the extent of underwriting you want me to do for an idea? Would it be 1 crore, 5 crores, 100 crores, 1,000 crores? So I think people who do not have a great idea or cannot show a great roadmap of the journey and cannot promise that they can quickly turn positive will not be able to get money so easily. It's the same thing whether you are B2C or B2B. However, there is an interesting example nowadays that people are talking about. Just like you have Amazons and you have Big Basket and you mentioned the others, Flipkarts and others. There are also certain apps that are coming in now which say that we will give this app, we will rather launch the app tying up the local retailers, the kirana dukans around you. And you place an order, you will be serviced by the nearest kirana dukan. Now, this is a refreshing idea because people are comfortable, especially housewives who go to a particular kirana store. They are happy with the quality that they get and they insist that they'll get it from there. You may not like to go to some other shop, especially if it is veggies or certain items of fish or meat or other things. So therefore, this is a new idea. People might be willing to engage with this idea. But even there, given the experience with certain larger companies, people will say, tell us, how soon will you turn cash positive?
Okay, sir. Okay, so coming to the next question. So for entrepreneurs who are looking to start in next 1 2 years, so what are some of the major trends across industries which they should be aware of? Like from which are the trends from which the next big set of ideas can come?
That's a very difficult question to answer. Uh, Personally, for me, I think you should start by looking at the industry that you like. You need to have an understanding of that industry, because not all industries operate in the same manner, right? And you cannot think that you have the flexibility to jump and grab any idea from any industry. Fundamentally, for example, there could be a B2B versus a B2C. A B2B these days is seen as actually dealing with the businesses electronically. So instead of reaching out physically, you reach out on the internet or use such stuff. For a B2C, you're actually saying, I deal with you directly without any intermediaries. But reaching out to businesses, because businesses are clearly commercially minded, convenience minded, and they want to do business in a certain manner. When you go to a B2C, if you are trying to do e-retailing today, for example, like a big basket, the stage is already set. Your competition is standing there huge. It's huge. How do you now want to crack that? If you don't have that great idea of how to crack it, just because in e-retailing there is only 2 companies or 3 companies, does it mean there is an opportunity available there? My sense is, so that is one point. The second point is, in terms of the industry that you choose, you must definitely choose an industry that you understand. Let us say there's a person who's worked in for some time in an electronics company and is cognizant about chips and all those stuff, the hardware part of it. Now, if he is now looking to get into a startup thing, I would ideally think he must focus there and look for opportunities available there. These days, thanks to the COVID thing that has come out, healthcare industry is others. Everyone says there's a great opportunity in doing so many things. But the fact is, there are already companies that are there in healthcare, and these companies are also aggressively looking at what opportunities exist because of this COVID thing. So what are the opportunities? Is it remote consulting, telemedicine? Is it remote monitoring? Because you cannot reach out to a hospital for admission. So can I put a IoT kind of a device and monitor the key readings, maybe the BP, so on and so forth? Is it that? Is it giving you consultation of doctors? Fact is, those apps are available today. Is it dealing with the pressure on the mind because of this fear from COVID? So maybe there are some apps that are now focusing on how to address the mental stress that people are facing. So there are a number of such ideas that come up. Ideally, I would think a person should understand the industry. So if someone is looking to be a startup entrepreneur in 2 years, let's say, or in 1 year, I would ideally say look around the industries. There are maybe about 20, 30 industries broadly. Look for what is it that seems attractive to you. Attractive because it solves a large demographic demand. For example, fintech. Everyone has got into fintech in the last 5-6 years, as you are aware. But thanks to what has happened in COVID, a number of the fintech companies are not getting serviced. Loans are not being repaid. So those companies are staring at huge losses. If you look at that and you think that, no, within this, I find a certain niche. And I think now is the time to go in, because existing companies are under severe stress. They will not come into this area. And I can go in because I have a bright idea. You might want to look at that. Just like we talked about healthcare, where we said there are 4 or 5 areas, there are some companies definitely. So look at the competition that exists there what is the experience of those competition. While these are not listed companies, as you know, most startups, in fact, not a single startup is listed, but their financial data is available to you. From the company register of company database, you can look at their things and understand what they are doing. And then you might come to an understanding that this is a good area, but it has got weak companies, or the companies that are existing there haven't thought of a bright idea. I have got a bright idea. That is the power of my conviction. And therefore I say, okay, you are there, but I can still come and win. I think those are the ones that the startup entrepreneur or someone who is a potential promoter should look at.
Okay, sir. So coming to the this ongoing COVID-19 pandemic, so what are the few things you feel startups should get right to survive through this difficult situation? Like for the startups you mentor, what are the few advices you are giving to them that they should follow during this crisis?
The primary thing is, the ability to survive this phase. In order to make it a success in the long run, you first need to survive the short run. So in the short term, you need to survive the complete disbanding of the market, inability to reach out to customers. So do you have the cash to service your existing customers? You may not have the cash to look for new customers, which is all right, but do you have the wherewithal to service your existing customers? And suppose you have a large team, you have employed a huge team, how are you going to deal with the outflow from your bank account because you don't have enough money? Early stage startups or those which are just about 3-4 years old may not have the cash wherewithal. You also need to look at your customers. Are they in a position to pay you up? If they are going to delay payments or if they're not going to pay up immediately, how are you going to deal with that cash crunch? So what are you going to do in terms of staying alive in the short term through cutting down on expenses? And do you have to redo your business model to specifically address the issue of social distancing? Can you handle it? In some products, it might be impossible to do it. But in some products, it might be possible to do it. For example, EdTech has shown it very clearly. Instead of going to a place to listen to the lecture, you sit at your homes and the content is streamed and you are able to be there. So that ensures your product is continuing to deliver, your sales continue to come in. But for others who have a challenge, they have to cut down on expenses drastically, starting with the promoter expenses, starting with the senior management expenses, and maybe with other employees requesting them to take a pay cut. You can compensate them later. If you are looking at hiring, don't hire them right away, or hire them but tell them that first 2-3 months you'll have to work pro bono, and then we sort of start paying you, delaying payments to your own suppliers. So there are various things that you need to do. So if you survive is short term, then you are there for the long term. It would also mean looking at your business models. A few companies that I know of began looking at their e-platforms to see how their e-platforms could work better, could deliver better productivity. And use this time to also use your IT team, use them in this time to rework your products. If you have thought of certain product launches, and let's say you thought you will launch them after a year, work with the IT teams and have the product ready in 6 months. So if this opens up after 6 months, you are ready with your product upgrade. You are ready with your new product offering. You are ready with looking at a new customer segment. So these are the things that, people must spend their time on.
Okay, sir. So coming to the last question, so your career trajectory has been phenomenal. So what are the few things that we can learn from you, like for the students pursuing their MBA currently at IMT Ghaziabad, who will start their career in the corporate? So what are the few things we can learn from you as a professional?
Huh. So maybe I can talk more about my own background, which is banking and financial services. Now, this is an industry that will continue to boom for some more time. There is going to be a short-term stress in the industry due to COVID. You know, we talked about the loans and so on and so forth. But this is going to be purely short-term, and in the next few months, things will get back slowly to normalcy. And thanks to the demographics of this country, I think this industry, basically the banking, financial services, the insurance, the investment banking, the broking, and all that stuff, will really have a great time going forward. The important thing here is again to be on top of your product, no doubt about it. But do look out for new areas that are opening up, because new areas like, for example, asset management, the mutual fund industry opened up really 2 decades ago or 2.5 decades ago. Prior to that, it was just Unit Trust of India. So as it opened, a lot of young people got onto the mutual fund industry, and they have sort of grown with their companies, and they are now, you know, big people in that industry. So if you look at an early trend and you understand the trend, you must get onto that trend and you prosper on that. In every industry, I think there's going to be all these issues of, okay, how good are you? I think your MBA will give you a certain background, but I say that will count only in the initial year. Subsequently, people will look for what are the things that you have. Are you open? Do you learn? Can you work with teams? You know, these are things that people need to work on once they come, and be patient and run with it, and then you get the results that you want. And be prepared, be open to experiment with it, and look at various areas in your industry, because eventually that will get you, I can tell you.
Okay, sir. Okay, so that has been some really great insights.
Yeah.
So thank you for giving up this opportunity to ESL IMT Ghaziabad for hosting you in this Entrepreneur Speak series. So thanks a lot.
Thank you, Arghadeep. My best wishes to you and to your team. All
Yes,
the best.
yes, sir. Thank you.
Good luck.